crypto has entered a new bull market and is skyrocketing to new highs. Ethereum, which James recommended in September of 2017, is up 909% in his portfolio. Render,
more than that now, actually. But anyway, go ahead.
Well, that was as of yesterday,
yeah.
But yeah. Render is up 229% since the very first time when James and Chris Campbell, who you're going to meet here in a little bit, first recommended it. And then later that year, in December of 2022, they issued a double down recommendation on Render. That version of the recommendation is up an incredible 2,612% as of last night. And not to be ignored, Solana, another cryptocurrency, is up 1,170% since February 2021 recommendation. So if you were to go into James's portfolio right now for the early stage crypto investor, you'd see 27 of 29 open plays that are up in his Coinbase portfolio. And James, real quick before you interrupt, which I know you're going to do a lot today, 22 of those 27 are up triple digits. I want to bring your main analyst. He covers a lot of crypto concerns and ideas on the crypto call that we do every week for early stage crypto investor. Many of you may recognize Chris because he writes for Altucher's investment network. He is very involved in the picks, as I just mentioned, an early stage crypto investor. And he also writes a daily e-letter. And if you don't read this, you need to start reading this. It's Altucher Confidential. It's a fantastic read. Excuse me, Chris travels the world. And I'm going to share what is likely an embarrassing story a little bit with Chris. But yeah, back in 2021, I gave Chris a call. And he was working on a report. And I can't remember exactly what it was, but he was working on something. Gave him a call. And it was Monday morning, if I remember correctly, and he was distracted. Usually Chris is very dialed in and focused, and I could tell he was distracted. I'm like, hey man, is everything okay? And he's like, yeah, something very weird just happened to me over the weekend. I'm like, what happened? He's like, well, Chris, as I said, he travels the world, he finds really unique investment opportunities, and he invested in something called a rare Pepe back in like 2017. And if you're familiar with NFTs, non-fungible tokens, you might know a little bit about rare Pepes. And he bought one very early on for the princely sum of $242. And so that was back in 2017. When I talked to him in 2021 on that day where he was distracted, he's like, I put that up for sale over the weekend and someone paid me 111 Ethereum for it. Now, back then Ethereum was somewhere in the $3,200 range, so everyone at home, you could do the math on that. But it is by far, without any question, the greatest investment in the history of Agora Financial editors, right? There's no one that's done, 138,000% or something, you could do the math. But it is a great story. Could not have happened to a better guy than Chris. So Chris, thank you very much for joining us. I know you're in Costa Rica, right?
Yes, I just got into Costa Rica today.
Well, he travels the world looking for new opportunities for you as our readers. So I want to get this crypto discussion started, if you don't mind, James.
But I want to ask Chris first, like, did that NFT retain its value? Like, whoever bought that NFT, are they crying now? Are they regretting the day they ever communicated with you?
I think you can get one for $100,000 today, so they're probably not too thrilled.
Yeah, they're not. So they went from 350 to 100 grand.
And this is related, and I want to get back to crypto picks, but this is a very important thing. NFTs are sort of just like art projects that were created and then stored using Ethereum, but they're not necessarily intertwined with the fundamentals of crypto. But a lot of people ask on our weekly calls, what's going to happen to crypto miners after the halving because their fees are going to go down? And the answer is related a little bit to NFTs, which is there's this new thing called ordinals, where you store what's called inscriptions or art or other things on specific blocks in the Bitcoin blockchain. And there's a lot more to it that makes it, for me, more interesting than NFTs. But this is something that you're going to start, everybody's going to start hearing about this 6 months from now. It's already a big industry, but let's say most people are going to start hearing about it 6 months from now, and then really 12 months from now, it's going to be super exciting. We're going to have more about it sooner rather than later, but it's an interesting part part of the crypto industry to look at, and it's related to Chris's story on NFTs.
Yeah, and that's a brand new phenomenon. Yeah, and and that's the kind of the things that you get from Chris and James is that they are early on stuff. 2013 when Bitcoin was $114, and now it's up. I don't know what percentage that is. It's a very large
percent.
Gazillion percent.
It's not fun when every time you do something new, everybody laughs at you.
No, but you do that a lot.
I'm getting tired of it.
Really? Well, keep doing it for another 10 years or so.
I remember in 2011 or 2010, the market was crashing, and I said, no, it's going up. And my mom called me and told me after I left the studio, maybe you shouldn't smile so much. And I'm like, why? Things are going great, but everybody thinks it doesn't matter. And then another friend called me and said he had a friend who called him and said, is that your friend James? He's an idiot. And I'm like, well, didn't you defend me? And he was like, no, I want to go out with her. And so it's really not fun.
Sold out to a potential date. That's terrible.
People are weak.
So let's talk a little bit about what's going on right now in the Ethereum space, because there's a new upgrade coming called Dencun. Now,
yes.
I would like, Chris, I'm going to pitch this to you first, and then James, you could provide any color that you want. But tell us what this Dencun upgrade is all about, and what does it mean for other players in the crypto industry?
Yeah, so this has been in the works for about 2 years. There are a few things changing to the Ethereum protocol, but the main thing to remember is just what's called EIP 4844. And EIP means Ethereum Improvement Proposal. And this is the main way that developers can pitch proposals and improvements to the network. So what this is going to do is it's going to make layer 2 blockchains, which are blockchains built on top of Ethereum, make them way more affordable and scalable and reduce the transaction fees by up to 90%. And it'll also reduce Ethereum transaction fees by like second order effects. And we can get into the main cryptos that we're talking, or we're looking at, these layer 2s.
Chris, can I add to what you're saying? So basically,
sure.
The problem with Ethereum right now is it's not as scalable. Visa does 24,000 transactions per second. Ethereum, this is going to sound shocking, Ethereum can only do 13 to 15 transactions per second. So it's much smaller than Ethereum in that sense. And so for years, as Chris mentioned, they've been working on this for years. They want to make Ethereum more scalable and cheaper than Visa. And so the issue is every time you do a transaction on Ethereum, it costs money, it takes time, and so on. What this Dencun upgrade is allows transactions to happen outside of the Ethereum, or it starts to move in this direction. It allows transactions to happen outside of the blockchain, so you can do many, many transactions, maybe thousands or millions of transactions outside the blockchain and bring it back into the blockchain. So that makes the Ethereum more scalable, and you just pay the price of one transaction, even if you're doing tens of thousands of transactions. So that's kind of a layman's summary.
So not only, so you're saying that right now Ethereum does 13 transactions per second, Visa does 40 or 20,000, whatever the number is. When they're done with this upgrade, they're going to be 3 to 4 times faster than Visa in terms of how many transactions per second that they can transact?
It's going to move in that direction. It's like there's more upgrades to happen, and each one is going to make this better and better. But what we're doing is, and Chris will describe further, we want to prepare for what's going to happen. So there are other tokens that help Ethereum, other cryptocurrencies that help Ethereum make this process a lot smoother, and that's what Chris was about to describe.
Okay.
And James, you own Ethereum, right?
Yeah, I own Ethereum, so just total disclosure.
Yeah, I own Ethereum too.
So about a year ago or a year and a half ago, I wanted to get into the closed-end fund ETHE, which was trading at a 50% discount. Anyway, that's another story. But Ethereum has passed Bitcoin in number of transactions per day. Ethereum's got a lot of catalysts coming up. I don't know if we'll have time to talk about them. But this Dencun upgrade is a pretty big catalyst that nobody really seemed to be aware of.
Yeah, the catalyst we definitely want to touch on here during this section. Chris, so what does the Ethereum upgrade mean for some of these other, what do you call them, layer 2 coins? Can you give us an example of what that is, and just so we can understand what actually it could mean for the crypto industry?
Yeah, so we've been watching the space really closely, and there are three main layer twos that are set to benefit from this upgrade. And one of them, so for example, one of them is the base chain, which is it's going to reduce fees from 58 cents per transaction on average to a penny.
When you
And
say base chain,
if
do you mean, is that the Ethereum blockchain? Is that what you mean?
that is Coinbase's layer two that they built on top of Ethereum.
Okay.
And if Coinbase had a token for this chain, we would definitely be looking into recommending it, but they haven't issued a token. Instead, what they did was built in collaboration with another layer two. And that's the one that we've been looking really closely at. And that's going to reduce the fees just as dramatically. And yeah, if we want to get into that, we can give that recommendation.
Do you want to recommend the token, Chris? It's one, it's
Yeah. So this one's called Optimism, and like I said, they've been collaborating with Coinbase. So all of the traffic, what Coinbase is doing is they're trying to drive all of the traffic onto all of their users onto their layer two on top of Ethereum, and this will obviously benefit the base chain, but it'll also benefit Optimism in a really big way. So that's 125 million users that are going to be using this and building on top of it because the fees are going to be so much cheaper.
like overnight. And Optimism is one of these tokens that batches transactions together and then is able to insert them back onto a blockchain. So if they insert them back onto this base blockchain, which is used by, which is developed using Ethereum, that's an enormous, one thing that's really important to understand, you can be bullish on Bitcoin, that's great. You can be bullish on Ethereum, that's great. They're going up. I mean, they're not staying at this level. Either it's going to dominate the global financial ecosystem or it's not. So it's not staying at these levels. So they're going to go up. But more importantly, what we call the picks and shovels plays are going to go up 10 times, 50 times, 100 times as much as Bitcoin and Ethereum. That's why we recommended Render. So Render is not, it's built on top of the crypto technology and Bitcoin and Ethereum, but it's used to render videos. It's up 2,600% since we recommended it at the worst time. And Optimism is similar. We're saying that this is going to go up a lot more than Ethereum. So if you love Ethereum and if you like that they're doing this upgrade, Optimism is one of the tokens you should be in. You don't even have to be in Ethereum. Just be in one of these tokens that are benefiting huge from this upgrade.
All right, so let me just, out of this group here, everyone here watching, I am the least crypto-enabled person on this call by a long shot. So I'm just going to try and reframe something that you guys, I think you just described. So Ethereum is trading around $4,000, so it's already in demand. There's a lot of demand for it already. It's one of the top coins in the ecosystem. They are now going through an upgrade that is not only going to be 100 times faster or more, but they're also going to be, 1 or 2% of the fees is going to be 50 times cheaper than it currently is to actually use it and transact in Ethereum. Is that correct?
Right, because imagine it was 13 to 15 transactions before, but now magically you could take one of those transactions and fit tens of thousands of transactions inside of it.
Yeah.
And that's what's happening here.
Okay.
And that's what Optimism does and some other tokens that we've been looking at.
Well, that seems exceedingly bullish for those coins.
And again, you can say, well, where's Bitcoin and Ethereum going to be 10 years from now? And again,
You're going to give a prediction.
I will.
Here. Okay.
But the whole idea is it's not going to be here.
Right.
Because it can't be here. That would be a failure. So it's either going to change the world or it's just we're not going to be talking about it 10 years from now. And our bets, of course, for many reasons, are that it's going to change the world.
Awesome. All right, so Optimism, where do people buy it? Can they buy it on Coinbase?
Well, first you have to be optimistic to buy Optimism.
Is that you have to sign a
that was
a
a
waiver?
dad joke.
Yeah, that was terrible.
That was a bad one.
That was terrible. Chris, where do they buy Optimism if they're interested?
Yeah, fortunately, it's on Coinbase, so it's very easy to buy. And if you want a dollar cost average, you can set that up really easily on Coinbase.
Chris,
well.
I know you are a huge fan of dollar cost averaging. You've been doing it for a long time.
Yeah.
So yeah, that makes it super easy. You can do $10 a week, $10 a month, whatever you want to put in there. It's a smart move. All right, let's talk about Ethereum. So it seems as though, and this may go without saying, you're very bullish on Ethereum. I know that, but many people on the call may not know that. Can you talk a little bit more about Ethereum and why you guys are so bullish about Ethereum? For example, what's the difference between Bitcoin and Ethereum for people who are not into a lot of crypto?
I'll start and say Bitcoin, was the beginning, but it wasn't perfect. Most times the first mover is not the best.
Yeah.
Does anyone remember the first search engine on the internet? I'll tell you what it was.
Jeeves.
No, it was the World Wide Web worm.
What?
www was the first search engine.
That might be a worse name than your report that you did on AI back in 1990.
Well, then the second search engine was called Galaxy EINet, so that's even a worse name. Then there was Lycos, which was actually developed 2 offices down from me when I was in graduate school. And then there was Excite, there was Alta Vista. Finally, there was InfoSeek, there was Inktomi. Finally, there was Google. So look, Bitcoin was the first, it's the biggest, it's the winner in terms of currencies, but Bitcoin is to currencies what Ethereum is to programming languages. So Chris mentioned layer 2 projects. So think of layer 2 as programs that Ethereum has developed. That's a simplified way to think about it. And in order to rebuild the global financial system, you need specific applications built on top of crypto. Ethereum does that. Ethereum was developed because it was hard to do that with Bitcoin, and Bitcoin will never do that well. Ethereum does that very well and is continuing to develop. And by comparison, around the world, there's about 1,000 software engineers working on ongoing developments in Bitcoin. 6 times that are working on Ethereum. So you have always the smartest programmers go to the most exciting projects, and they're at Ethereum right now.
Okay. So again, for the uninitiated among us, me being the leader, I've got an iPhone, right? Could this be considered Ethereum and the apps considered layer 2?
I don't know if I would make that comparison.
Okay, just let's edit that out. I know we're live.
What the hell was hard in what I said?
Nothing. I just was trying to simplify it a little bit. All right. So we've got Optimism. We've got Ethereum as the two big
Chris,
plays.
what do you have to say about Ethereum? Maybe you could explain it better than me.
Yeah, I think you covered it. I think there's a lot of smart contract blockchains out there, but Ethereum just has first mover advantage on that. But it also has the most developers, all of these upgrades that are already in the docket, the most decentralized apps, DeFi protocols. A lot of blockchains are hooking into Ethereum because they have the most users and the most development happening. So yeah, a lot of these so-called Ethereum killers are backtracking and acquiescing to the Ethereum ecosystem, which is what we kind of predicted 2 years ago. And yeah, now the upgrade is going to solidify that, I think.
And to be fair, again, because we're trying to be as professional as possible at the investing, even though we're big believers in Ethereum, we've recommended and done very well with some of the so-called Ethereum killers. We recommended Solana. I don't know, what percent are we up on Solana?
I think you said 1,100% or so.
Yeah, and we're up on Cardano, Hedera, so all these Ethereum killers out there. But gradually, Ethereum with these upgrades are going to do what Solana does, are going to do what Cardano does, and eventually we have to rethink how we diversify from Ethereum.
Okay, so I want to ask a macro question of you both, and maybe you can each give us a separate answer, but people want to know, one of our first questions here is, how long do you anticipate the crypto bull run to last? So if you were to pull out your crystal ball here and kind of estimate where you think we're going to be, will we be higher at the end of the year? Will we be, is it a 2-year bull run? What do you think?
Chris, you want to go first?
Yeah, right now, currently, I mean, this is obviously a dynamic situation, but currently I think about it in terms of how high Bitcoin is going to go because it's leading the market. So I think a better frame of reference is how high do you think Bitcoin is going to go, and just watch Bitcoin at the moment. But part of our thesis is there's going to be a moment where some of these blockchains get a ton of users and they actually start being used on a mass scale, and they'll decouple from the rest of the crypto markets and Bitcoin ultimately. And then we'll start seeing where the action really is in terms of the crypto market. And people are going to be attracted to the coins that are the projects that are getting the most users and are actually useful. And then there's going to be a paradigm shift in crypto in that regard. Right now, it's a lot of speculation, but once we start seeing these things actually being used, I think we're going to see a change in how people invest in these projects.
Awesome.
Yeah, and so for specific predictions, I'm going to say, and again, I might be off on the predictions, but I think you want to bet on the direction. So I think Bitcoin could easily hit $150,000 by the end of the year. Again, perhaps higher, but at least that number. And Ethereum could be easily somewhere between $10,000 and $15,000 or more by the end of the year. They both have lots of catalysts. Bitcoin in April has the halving. Ethereum, of course, has this upgrade tomorrow, but then they have future upgrades. And then in May, the SEC and the court system starts deciding about Ethereum ETFs. What did Bitcoin do when ETFs were in the news? Went from like 30,000 to 70,000. Mm-hmm. So Ethereum could even respond more because you have big institutional money like Fidelity or Vanguard or sovereign wealth funds of entire countries that would love to buy Bitcoin, but they're not going to go on some exchange like, let's say, Sushi Swap or Pancake. They're not going to use some weird exchange to buy $1 billion worth of Bitcoin. So there's a lot of money waiting for ETFs. We're still seeing it with the Bitcoin ETFs, the fastest rising ETFs in the history of investing. And Ethereum ETFs are right around the corner. So Ethereum's going to start going up in anticipation of that. Of course, there's going to be volatility. We have elections, 2 wars, and inflation. So in terms of like the question, when is the Bitcoin bull run going to end? I don't really like that question so much. In 2017, 2018, Bitcoin boomed and then totally crashed. It crashed because nobody was using it and nobody could figure out how to use it. And there weren't really exchanges allowing you to buy it. So, but now it's different. There are users. There's 200 million users of Bitcoin around the world. That number is only going to get bigger. There's entire countries who are adopting Bitcoin as a currency. You know why? Because the people don't trust their own currencies. And let me just say about the US, US is a little more resilient from that kind of, I'll call it hype, because the dollar has long been considered the reserve currency of the world. This is the currency that everybody else in the world wants to be in, maybe. And that maybe has only just started happening. The US is $34 trillion in debt. You know, every 90 days, the United States adds another $1 trillion to its debt. And if we think the nice people in Washington, D.C. are going to fix this problem, then you're just smoking crack. And the more of something there is, the greater the supply, the less value. If there's trillions of dollars worth of dollars just being printed up, the value of that dollar just goes down. And that means prices go up and there's inflation and everyone gets scared and they want to move their dollars out of dollars into something else. Guess what? There's this new currency where you can't print new currency, which is Bitcoin. And I'd rather be in Bitcoin than the dollar because it's not going to inflate. It's not going to lose its value. And then there's Ethereum, which builds the infrastructure around Bitcoin. And these are the blue chip cryptos. And then there's something like 25,000 smaller tokens. 95% of those are going to zero, but some of those are going to go up so many more multiples than Bitcoin and Ethereum. It's crazy. An entire new financial system is being built. And we've seen this over history. We saw bartering go to gold. We saw gold go to paper IOUs for gold, which eventually became paper money backed by gold. We saw, Nixon go off the gold standard. So now we just have pieces of paper that say, "In God we trust," and meaning, please, God, keep the dollar high. And now it's the next evolution. So every industry evolves and money evolves as well. And this is a natural evolution that the anonymous Satoshi Nakamoto saw after trillions of dollars were printed up in the global financial crisis. He made Bitcoin. It's not perfect, but that's why there's all these other tokens.
Yeah, it seems like it's a perfect remedy for what's going on, as you say, in Washington with money being printed. where you're going from an infinite supply of dollars to a well-defined number of Bitcoin that will ever be in existence. And so if there's more demand for it, like new ETFs coming on and people putting billions and billions of dollars in that ETF, there's only one way for that thing to go, for Bitcoin to go in the long run. Now, I'm not saying it's always just going to go straight up, but in the long run, it seems like there's a lot of support for that. So I do have a question, because some people are asking here. I've got a question about Coinbase. And safety in cryptocurrency has always been a top of mind subject. So if I have coins in Coinbase, as I know well as you guys do, but is putting your money and holding coins on Coinbase a safe approach to investing in cryptocurrency? Chris, why don't you take that one first?
Yeah, so any crypto that I don't plan on holding for the long term is in Coinbase, and it's probably less than 10%, 5% of my total portfolio. So I don't keep a lot of crypto on centralized exchanges in general. I like the fact that you can hold it in your own custody and take care of that, be your own bank. And that's a preference, and I understand that it's complicated for a lot of people and there's a learning curve, but I do recommend that everybody at least get a little bit well-versed and understand how to do it, understand seed phrases and the mechanism of self-custody. Yeah, that's just me.
It's an important point that Chris brings up, that you could actually hold all your Bitcoin assets, and you could decide where they go and who sees them. Like right now, if you have more than $100, you can't just use your pocket to hold all your money. You got to go put your money into a bank. Well, guess what? Everybody, the bank sees how much money you have, the government sees how much money you have, Palantir probably sees how much money you have, and other government affiliated companies or agencies. And the banking system is an antique, and they know it. So if I wire money to Chris right now, he's in Costa Rica, I got to go to my bank. It goes from my bank to the local reserve bank, which then goes to the Federal Reserve, which then goes to the SWIFT wiring system, which was built in 1972, which then goes to the Costa Rica Central Bank, and all the way down to some little bank he can get it at. There's fees every step of the way. There's time every step of the way. There's the possibility of a human entering in a wrong decimal point every step of the way. So again, money has to evolve. These are problems, and all those fees is a global inflation in the system. So that's why his one phrase, "be your own bank," is a very important phrase, and it's going to become more and more part of our discussion about crypto.
Okay, so all right. Well, I think it's about time here. We'll wrap up on the crypto discussion. Before we say goodbye to Chris, do you have any last words about what's coming up in terms of trigger events or anything like that in the crypto space that you have your eyes on before we part ways?
Well, everybody knows about the halving that's happening, and that's part of what I'm doing out here in Central America. Is there's a lot of stuff happening that's not being reported, especially economic zones that are adopting crypto. The Bitcoin beach was really interesting. I'm going to the Bitcoin jungle today and tomorrow.
Watch out for the Bitcoin lions.
Yeah. So I think one of the big catalysts in the future, maybe midterm, is the rise of these private cities, these so-called network states. I spent a month and a half in Honduras studying those, and there's some exciting stuff, and I'll be writing about it. And I think this idea of these crypto first charter cities is something that's going to catch on in the near future, and that'll be really good for crypto.
Awesome. And think about it too, South America or in Central America are perfect test zones for crypto. Nobody trusts the currency. Like, would you rather have pesos than dollars? Of course not. So nobody trusts their currency. Argentina, everyone's bailing out of their currency. And El Salvador has given up completely on their currency and is all in on Bitcoin. And by the way, they bought Bitcoin for an average price of something like $30,000 a coin. They're making a ton of money, and other governments are seeing this and paying attention.
Yeah. Well, Chris, first off, thank you very much for your time. We really appreciate you interrupting you today to come and join us. It was great having you on. Again, and if people here watching, you all get access to Altucher Confidential. It's a free service that we provide. It's a fantastic read every single day. I strongly urge you to pick it up and take a look at it. It should be in your inbox. Chris, thanks again for your time. Really appreciate it.
Yeah, problem. Thank you.
So Zach just told me El Salvador's already got $84 million in profit on their Bitcoin investment.
Unrealized profit.
Really? Yeah. So other countries, that 84 million, like for the U.S., 84 million is not a lot, but for other countries, that's their GDP. So that's a big number that they've benefited from.
All right. So just to summarize on the crypto picks, we've got Ethereum, and what was the other one?
Optimism.
Optimism. How can I forget that? Optimism and Ethereum, both available on Coinbase. Those are free to you. And I do see that some people are asking how to get access to James and Chris's writing on all sorts of things, crypto. And we have a website that you guys can go check out. It's called thecoinofthedecade.com. Matt, it is the coin of the decade, correct? Or is it just coin of the decade? It's one of the
Coin of the decade.
Coinofthedecade.com, all one word, no spaces. Go ahead and type that in, and you'll get a special deal if you're interested in joining Chris and James on their travels in cryptocurrency.
And it's been very exciting, but also hard because look, we were having weekly calls with everybody all through the downturn, and everyone was saying, "Is Bitcoin going to zero? Is crypto going to zero?" And quite correctly, because it had fallen so much. But that's when we had to go in and do the double downs and really kind of stake our reputations on this at the hardest time. Now you see all these guys coming out with their new crypto newsletters, but we were in there in the gutter, saying to buy.
So there's one word that you mentioned, and I want to dig into that now because you mentioned the word ordinals. Okay, I think everyone should write that down because this is going to be something that probably sounds very foreign to you right now, but in the months and year ahead or so, it's probably going to become a little more mainstream, and we want to give James credit for mentioning it here first. But like, I remember the days when someone said, "Hey, there are these guys mining money on their computer." It was 2011. I was in Vancouver at a conference, and I said, "I don't get it. I don't know what you're talking about," right? So I think this, and then NFTs came along. And I'm like, what's an NFT? I don't get it. What's the big deal? It's a picture on. And so I think ordinals for most people are going to fall into that camp. So can you describe again what ordinals are and what you think the use case for these things long term might be that would make them worth more than they are today?
Yeah, and so they might not be worth more than what they are today.
Yeah.
I'm just saying this is something that is currently happening where there is a potential huge money-making opportunity there. It's like 12 months before NFT, the phrase NFT was known. You could have gotten into NFTs early and done like what Chris did and turned $240 into $300,000. And so people were asking me again, well, how are miners going to make money if the reward for Bitcoin gets cut in half essentially when the halving happens? And so looking into this, I saw about ordinals and something called inscriptions, that they make money inscribing Satoshis. A Satoshi is 1/1000th of a Bitcoin. And then I started hearing about this at conferences. Oh, I'm doing this with ordinals, I'm doing this with ordinals. And so looking into it more, it's actually a very exciting opportunity. I mean, to describe it all right now is too much, but we'll definitely do something in our group. But it's very, very interesting and exciting what's happening there, and I'm just trying to wrap my head around real use cases. Like NFTs, I never fully really like the idea of NFTs. NFTs are just these pixelated art projects that were stored on blockchain but had really nothing else to do with a blockchain. And let's just say right now, ordinals are different than that, but could fall under some of the same traps. So I just want to make sure I understand. I come up with ideas how people really are making money as opposed to a fad or hype. There's plenty of ways to make money with fads and hypes, and that's not what we do.
Some ways to use crypto to protect against government's movement towards CBDCs and digital dollars. So
great question. Yeah. So CBDC, central bank digital currency, means the government will, instead of issuing dollars, they will issue kind of Bitcoin-like coins that they control completely. And the fear is, like if I have a $100 bill and I go to the store will accept my $100 bill. But what if I have $100 worth of a crypto-like coin that's completely controlled by the government? And what if the government doesn't like my political opinion? The fear is they could shut off my $100 CBDC, which is a scary thing. We've already seen examples of this in Canada, which is a totally democratic country, and yet they didn't like the opinions of some truckers. This was like 2 years ago, or 3 years ago, and they seized the bank assets of those truckers. Now, that happened, but it's even easier to do if we switch to a nationwide cryptocurrency controlled by the government. So one way to protect yourself is the obvious way, which is move your assets to something like Bitcoin or even gold, or something that, the problem with gold is though, where do you keep the gold? I'm not gonna keep, let's say someone has like $1 million. I'm not gonna keep $1 million of gold in my basement. And like, what if I have to move? Am I gonna like have a big truck take my $1 million of gold from like one house to the other? What if there's like the Civil War when this movie comes out next month? Am I gonna really drive to Texas with the gold on my back? So crypto is the way to avoid the fears of CBDCs. But more importantly, CBDCs are not necessarily a bad thing for us. What I care about for us is that we make money as investors. And CBDCs, the development of CBDCs by the US or any country will require infrastructure. The world is not ready for a CBDC, just technically. We don't have the programs written yet. So that will be good for us because, again, the picks and shovels tokens, which we focus on, will benefit enormously from the development of CBDCs. And then just like with, like you were talking about the deep fakes with AI and the frauds, and just do the common sense things. Like, don't keep all your money in a CBDC. Put some of your assets, be your own bank, as Chris said, so that nobody has access to your money but you. And that could be done through Bitcoin or Ethereum or any of these, or diversified through many, many tokens.
I think a lot of people too have questions about central bank digital currencies. They've heard about this move by the government, wants to do that. What's the difference between what the government's talking about doing with CBDCs and a cryptocurrency? And I know that cryptocurrencies all have different projects and they're kind of different purposes and uses, but in general, what's the difference between a CBDC and a cryptocurrency? So
the average cryptocurrency, let's just take Bitcoin as the main example.
Perfect.
That was written by people who want to avoid government control of their currency. Like, the people who made the first versions of Bitcoin, they wanted to avoid the possibility of a government printing up trillions of dollars and destroying the value of the dollars in their pocket. They wanted to avoid the banking system where there's 6 intermediaries taking fees, or whatever your tax revenue services coming in and seizing your money. So they developed an alternative, which is Bitcoin, which is an evolution of the financial system. CBDC is going to be code not written by individuals, but written by individuals working for the government. And those individuals are going to include a backdoor which says, oh, shut this guy down, or take this guy's money, or whatever. So the government will have a lot more control over software they write to define your money. So that's the main difference, is government writing the code versus more libertarian-minded people. And I'm not saying be a libertarian. I'm just saying more independent-minded people writing the code as opposed to the government writing the code. Government, if I was the government and making CBDC, I would say, put in a little back door so I can shut down Doug's money whenever I feel like it.
Yeah, I figured you'd do that.
So I'll do that like every once in a while, just to keep you hopping. Like, Doug didn't return my call today. He has no money this weekend.
But like the decentralized nature of cryptocurrencies is the opposite of what a central bank digital currency is trying to do, right?
Which is why the government is always kind of, look, the government was against, people will remember this, in 1995, 96, the government was against the internet. And because it was decentralized. The internet is decentralized information, really. And the government wanted to figure out how to regulate it. Bill Clinton made the wise choice to say, no, we're not going to regulate it, and we're not even going to tax e-commerce for a while. Right. So that was probably the biggest instigator for the growth of the internet. Hopefully, and the government's thought a lot about regulating crypto, but guess what? Guess who the biggest user of crypto probably is? It's the US government. First off, for whatever reason, the US government has 200,000 Bitcoin and various other coins. Second, the US government spends a lot of money funding resistance movements in countries they don't like in China, for instance. Well, you can't just wire activists and rebels in China money because China will see it and seize it. So the U.S. government has to use crypto. I was at an activist conference in January of 2022, and activists from all over the world, like basically the resistances from all over the world, human rights activists, were gathered to learn and be trained how to use crypto to raise funds for their movements. So that's a big use case for the U.S. government. So nobody's getting rid of crypto to replace it with the CBDC.
So we got a question here about staking. So is staking and yield farming a better and more reliable way to make money with crypto instead of buying and selling crypto itself?
Well, you can only make money with staking if you do buy crypto and stake it. So what staking means is, let's say there's a crypto exchange. Then the crypto exchange needs lots of currency in that exchange. Like let's say Pancake Swap is the name of a crypto exchange. They need the people who are running Pancake Swap, and it's decentralized, so it's people who kind of volunteer. They allow you to stake the token of the Pancake Swap exchange, which is called Cake, and they use that to make trades and allow liquidity on the exchange. So if you say, hey, I'm willing to give you my Cake tokens for 6 months, you could do whatever you want and then I'll take my Cake back, but I need something for it. So they'll say, oh, okay, well, we'll give you 8% interest or 12% interest. I mean, it's like a market, it changes. And that's staking, and it's usually more profitable than dividends. But I wouldn't say it's a way to generate wealth. It's just if you're going to hold some currencies for the long term, you can then stake those currencies and make a nice interest payment while you're waiting. It's like dividends of companies, or it's like interest you get on a savings account. So you say, or it's like money you get from a treasury bill. So it's like, hold my money for a little while, but I get a reward for that, and that's staking. I myself don't stake just because I am paranoid, and I like to have just control over my money. Yeah. And paranoia goes a long way in terms of investing. Yeah. Investing's hard, and knowing what to do with your money is hard. There's 3 skills to money: making it, keeping it, growing it. And they're very different skills. So making it, yeah, you can buy crypto and it grows. But keeping it, like so you don't make bad investments, is something I always say, which is if you want to win the game, you have to stay in the game. So manage your risk, manage your position sizes, manage the potential for fraud. And then, of course, making money, then growing it requires a certain discipline that you don't take the kind of risks you took when you first made the money. When you first made the money, you had 0 and then you made money. But now you have something that you need to keep. So you got to be a little bit more, you have to, 90% of investing, even no matter how great things are, AI, crypto, the world, whatever, 90% of good investing is about reducing risk. And that's really important for people listening to this to know.
So we got another question here, and this has to do with exchanges, where you buy and sell cryptocurrencies. And for the last 3 or 4 years, Coinbase, obviously that's the 800-pound gorilla, I think here domestically in the US anyway, it has been a proxy for Bitcoin prices. So when Bitcoin went up, coin, the actual ticker symbol of the Coinbase stock would go up with it.
Yeah.
Today, we're not seeing that. There seems to be a decoupling of Bitcoin prices. Is up at all-time highs at around $70,000 last time I looked. And I'll give you one example, like Mara, which is a Bitcoin miner, and Coinbase. I think Coinbase is actually up, but like Bitcoin miners and stuff aren't doing nearly as well. So why would that be? So that's 2 questions in one: Coinbase and then.
What's Coinbase price right now? Because the same time we were dealing with FTX, I was saying on our weekly crypto calls that Coinbase, which was at 37 then, was a strong buy, because this is ridiculous that Coinbase would go down because of some Bahamas-based crypto exchange. If anything, Coinbase was going to benefit.
256.
Right, it's 256. So for a long time, Coinbase, as you said, went up with Bitcoin. But now here's the issue. I don't need Coinbase anymore to buy Bitcoin. I don't want to use Coinbase. If I just want to buy Bitcoin, I'd rather use the New York Stock Exchange, which is the best exchange in the United States. And you can do that now for the first time because of these Bitcoin ETFs. That's why the Bitcoin ETFs, and later on the Ethereum ETFs, and then later on other crypto ETFs, that's why these are so important. People trust grandma and grandpa on Main Street, Indianapolis. They're not going to use Sushi Swap, Pancake Swap, even Coinbase.
Yeah.
They want to just call their broker at Schwab and say, buy me some of these Bitcoin ETFs. It's on the New York Stock Exchange. I know it's a stock. I know what that is.
Right, and it's a lot easier. That's where you have your money is in your brokerage account. I'm looking here at the question now.
So Coinbase is going to have to really innovate to solve this problem for themselves.
This is one of the many reasons people know this is live, because I misread the question, but it's the Bitcoin miners that seem to be decoupling from
because guess what? On April 22nd, or whenever the Bitcoin halving occurs, suddenly their profits get cut in half. So they, again, have to innovate to come up with more profitable opportunities. Now, as Bitcoin goes up, so Bitcoin miners make profit when they mine the Bitcoin and they get the reward. That reward's being cut in half, but if Bitcoin doubles in price, which it has recently, then their profits don't go down.
Right.
So that's one way. The other way is with these ordinals and inscriptions. They provide more services, and that's another way they hold on to their profits. Another way is they just add transaction fees. So if you're invested in Bitcoin miners, which I'm not invested in any, but if you're invested in Bitcoin miners, you have to study these different ways to make money and see how they're dealing with, and also if electricity bills go up, Bitcoin miners are in trouble. There's an interesting opportunity, though, to maybe mine for smaller, like penny cryptos. I think that's like an interesting business that if I was looking at the mining business now, that's the business I would start.
Right.
See you later. I'm going to just go into that business now.
That's a good idea. We got to go.
That's the thing is, I enjoy this. Like, I've been doing professional investing for over 2 decades, but I've also been writing about investing for 2 decades. And I remember a lot of hedge funds back in the 00s, they wanted to hire me, but they would always say, but you have to stop writing because we don't want you writing about your investments that you have with us, or else you'll make less money. And I just never would do it. Like, I love when we have communities of like-minded people, and as antisocial as I am, this becomes my community, my friends. And and I like people benefiting from things I've learned. I just like this aspect of the business. I hate raising money for a hedge fund because the rich, wealthy people are just really annoying. They're annoying customers.
Oh, if you're interested in joining James and Chris on the crypto journey that they're on, it's called coinofthedecade.com. Check it out, and you can get all their recommendations and portfolio. So thank you very much, and we'll talk to you all soon.